All right. Welcome back, ladies and gentlemen. So, let's see here. I'm actually going to use a highlighter here. I'm going to do my explicit in yellow here and my implicit in red, so I don't have to keep trying to write. So let's see here. Old man McDonald gives banjo lessons for $20 an hour. One day he spends 10 hours planting $100 worth of seeds on his farm. What explicit and implicit costs has he incurred? Well, let's see. Since he spent his time planting the seeds, that means he couldn't do the banjo lessons for $20 an hour. Uh, and since he spent 10 hours out planting the seeds, that's 200 in implicit cost. Now, his explicits, on the other hand, well, he had to spend $100 to get those seeds, so that's 100 on its own there. So, what cost will his accountant measure? Those are going to be the explicit ones, which are the 100 or is the 100. Now, for his accounting profit, accountants only worry about the explicit. So, the 200 here is something new. The 200, I'll go like this. This is my revenue. So if I'm trying to find my profit, I got to take 200. And I'm going to subtract my explicit cost. So that's going to be 100. 200 minus 100. 100. But an economist is going to worry about both explicit and implicit. So that's 200 minus these two combined here, which is 300, which gets me a negative 100. So you notice economists say, hey, this is not a good idea. You'd be better off just to not buy the seeds and do your banjo lessons. Whereas the accountant says, you know what? This is fine. Dollars in, dollars out. You're coming out ahead. Good decision. So that one's that. Now let's see here. You sell T-shirts at your high school's football game. Each shirt costs $5 to make, so that's going to be an explicit cost. I know off the bat. And sells for $10. So that's my revenue right there. Is $10 a shirt. Got my explicit cost up here. Each game lasts 2 hours, and you sell 100 shirts per game. So that means I'm going to bring in $1,000 of revenue. I did 100 times 10. So if I'm assuming I'm going to find some profit here is what I'm assuming. So, and it cost me 500 to make the shirts. That's my explicit cost. And I could always earn $8 per hour at my other job. Which of the following is correct? Your accounting profit from selling shirts at the game is, well, that's 1,000 minus the 500. My explicit, that's 500. So I can get rid of D, B, nope, not B. B's in there still. B's still in, sorry. Now, for my economists, they got to consider this 8 here. So $8 per hour, but I could have worked 2 hours, so that's 16. So I need to subtract 16 here. 484. Sorry, that's horrible. Which looks like C is in cat to me. So this one is a little bit trickier here. And I realize it's cut off on my slide here, but on your paper it should be all right. So we've got a bunch of stuff here. And we're going to look and try to label it, or I'm going to go through and label it as I read here. So the ice cream shop of Jim's here brings in $400 per year. That looks like revenue to me. While he pays his workers $20 per year and costs bikes and his workers per year and tools and bikes cost him $50. So that looks like those both look like explicit cost to me. Jim could rent the building for $200 per year. Ooh, tricky, Mr. Sutton. This looks like an implicit cost to me because that's income he could have got, but he's not because he's not renting it. He's using the building. The ice cream supplies cost $80 per year and the workers $50. So that looks like more explicit cost. Jim could also return to his career as a professional bike rider, earning $100 per year. That looks like income, or that looks like implicit to me. That's foregone income because he can't do that and run the shop and ice cream shop. So what describes this situation best here? As I look at the options, it looks like I'm going to have to distinguish between accountant and economist profit. So accountants would say, hey, we got $400 of revenue, and we're going to subtract out all those explicit costs, which is this guy, the 20. Here, I'll highlight them for you. Oh, no, not the eraser. So these are all the explicit costs, right? There's 20, 50, 50, and 80. So that's 200 to me. So 400 minus 200 should get me 200. So that's an accountant. So the accountants look pretty cool with this. But the economist is going to take into consideration this 200 here and this 100 here. So that's going to be 400 minus 200 in explicit, minus another 200 in the rent that he could have gotten, minus another 100 in the income he could have gotten from riding his bike, which gets me to a negative 100. To me, this looks like a good idea for the accountant, bad idea for the economist. So A, I think, is out because Jim's accountant would say, hey, it's fine, you're making 200 bucks. Keep doing what you're doing. Jim's accountant says the ice cream and bike shop are financially untenable. That doesn't seem to be true. He's making 200 bucks according to the accountant. Jim's economist friend and accountant agree. That throws me right off here because this is negative, this is positive. That Jim should close shop and return to cycling while renting his building. No. Jim's accountant and economist agree that Jim should keep doing what he's doing. No, his accountant seems to think that. Jim's economist buddy advises Jim to rent the building and return to cycling. Well, he's obviously not making a profit doing what he's doing here, so yeah, I think I like E. I think I like E. All right, that was a tricky one. Let me know if you have any questions.